is the end of the first full Business and Markets Week in August 2026, and we welcome all our viewers from around the world. I am Melissa Enoch here at the NGX Trading Floor in Lagos.
Yes, it's another Thank God Friday to the start of the weekend. I am Grace Agbaragu, and this is your Money Moves.
All right, let's see off with news now. Malawi's central bank has kept its policy rate unchanged at 24%, saying the current monetary policy stance remains appropriate to support disinflation and macroeconomic stability. The decision marks a second consecutive meeting with rates on hold following a 200 basis point cut in March. Inflation stood at 21.1% in June and is projected to average 22% in 2026, well above the central bank's 5% medium-term target. The central bank has also cut its 2026 growth forecast to 2.8% from 3.8%, citing weaker non-agricultural activity, while warning that potential El Nino conditions could further pressure food prices. Meanwhile, the Financial Sector Conduct Authority FSCA Commissioner has delivered an annual public lecture at the University of Cape Town, focusing on the role of leadership, innovation, and accountability in the financial sector. The lecture, themed Governing the Invisible, Leadership, Innovation, and Accountability in the Financial Sector, explored how regulators and industry players can build trust, strengthen oversight, and support a more resilient financial system. Let's listen.
Why has technology become such a defining force in finance? And why does it matter so much for regulators? British economist Robert Skidelsky offers a useful perspective on this. He reminds us that while our forebears used tools and machines, they did not live in what he describes as a machine age. Machines supported human activity, but they did not fundamentally shape the conditions of human existence. Today, they do. More than at any other point in history, we have become deeply interconnected with technological systems. As Skidelsky observes, we humans are wired up parts of a complex technological system. We depend on this system for the way we fight, the way we work, the way we live, and the way we think. And if this is true of society generally, it is perhaps even more true of financial services as a microcosm of society. Financial services have always evolved alongside technological progress. From the introduction of electronic payments and internet banking to today's instant payment systems and platform-based financial services.
Zambia's private sector returned to growth in July as improving demand lifted output and new orders, while business confidence reached its highest level in more than 8 years. The Purchasing Managers Index rose to 50.7 from 49.9 in June, moving above the 50-point threshold that separates expansion from contraction and ending a 3-month period of deteriorating business conditions. The upturn was supported by rising employment, stronger input buying, and faster supply deliveries, although input cost pressures increased and firms raised output prices. In other news, at the Global Conference 2026, industry experts explored how the rapid growth of artificial intelligence is driving demand for power, data centers, and grid infrastructure. The session, AI Infrastructure at Scale, Financing the Power-Constrained Grid, focused on how investors are mobilizing capital for energy generation, storage, grid, and data centers while balancing reliability, cost, and long-term sustainability. Here are some excerpts.
It's important to understand that the Middle East in general, Saudi in particular, is very well positioned to capture this whole AI surge by virtue of where it stands on its feet as far as energy is concerned. Lowest cost, reliable, and green. That's like a icing on the cake on top of everything else. Lucy, I heard you mention about 5 cents in terms of integrating round the power. In Saudi, we can do that behind the meter at about 3 to 3.5 cents. And what that means is when you look at the whole position of the country in terms of connectivity, Saudi people don't realize in the last 9 years built 17 subsea landing stations, which is going up to 24 in the next 1.5 years.
But what does that do for you? What do you get with those?
The whole point that I'm trying to make here is that it's not about captive consumption. It is about being a center of gravity to basically deliver compute power to half the world, which is Europe, which is to Africa, 1.5 billion people in Africa, about 450 million people in Europe, and 2 billion people in South Asia. All of this within 30 to 40 milliseconds of latency. And the country remains very well positioned as we, in terms of the AI cycle, move from a training to basically other AI workloads. It is able to service all of this population.
Finally, on News Now this Friday, the Democratic Republic of Congo has banned exports of copper and cobalt concentrates as the government steps up efforts to promote domestic processing and retain more value from its mineral resources. The move sent 3-month copper on the London Metal Exchange up as much as 1.8% to $14,369.50 a ton, its highest level since January 29, and close to its record peak of $14,527.50. The DRC is the world's largest cobalt producer and a major source of copper and other energy transition minerals. The government is seeking to use its dominant position in these markets to expand local processing capacity and capture a greater share of mining value. I am Melissa Enoch, and that's it on News Now for today. The show returns shortly after the break with Grace at the NGX trading floor for our market rounds.
We look at is the channels through which this affects us. One obviously is through oil prices and the petroleum prices at the pump, and the other is the logistics in terms of getting these very commodities here. Now, in terms of how a currency performs, is not just that aspect. For us, I think we have been very fortunate so far as a country. Why do I say that? We say that because the price of oil, although has gone up, when you compare that to our main export commodity, the main export commodity still also remains highly priced. Right now, I think we are talking about over 13,000 US dollars per metric ton, whereas oil, I think, is now again back in the 90s. So when we compare the two, we see that I think we are still much better in terms of what we call the terms of trade. So that then enables us to get more inflows from the exports of that commodity that is happening. So that provides a cushion to the currency that we have, because it's an interaction of supply and demand.
Welcome back to Money Moves. Thanks for staying with us. Let's now go over to Grace for reports on how the markets closed today.
Thank you, Melissa. Let's now take a look at how the markets rounded up trading for the week, beginning with the equities. The NGX All-Share Index edged up 0.12%, while the BRM in Abidjan closed at 485.48, up 0.66%. The Nairobi Securities Exchange rose 0.19% to 235.08. In Southern Africa, the Johannesburg Stock Exchange jumped 1.94%, while Mauritius Semdex closed on the negative, down 0.15%. In North Africa, Morocco's MESI advanced 1.60% to 18,755.26 as at 13:58 GMT. Finally, let's take a look at the energy commodities. Brent crude slipped 0.70% to $81.91, while the BTI declined 0.50% to $76.90. Natural gas gained 1.59% to $2.68, while Arabian gasoline rose 0.49% to $2.95 as at 13:41 GMT. And that's our Money Moves markets today. Back to you, Melissa.
Grace, thank you very much for those market updates. And that's it on today's edition of Money Moves. From all of us here at the NGX Trading Floor, we say thank you very much for watching and do have a splendid weekend.